Hello, Oracles. Today I'm going to share with you my dividend income coming from December 2024 and my entire year at progress for 2024 as well when it comes to dividends. So I'll go over every single stock and ETF that I own, what I ended up getting for a payment for December, and what the total payment was for the entire year. Plus, I'll show you what my growth was year over year to show you kind of how that snowball effect works when it comes to those dividends and why, to me, I changed my strategy from investing in a lot of growth stocks and mostly Tesla into this because now I can generate more income to be able to buy more of those growth stocks that I love. All right, and I'm going to jump right into it because this could be a lengthy video and I'm going to try to keep it pretty short for you. So looking at December alone, Coney brought in 66.96, Tesla 50.15, AMZ 25.86, BITO 47.64, YMAX 37.21. XDTE brought in 1801, TLTW brought in 6551, SVOL 2231, QQQI brought in 2066, SPYI brought in 1786, JEPQ brought in 1525, JEPI brought in 1097, and AGGH brought in 910. ARCC brought in 3695, Realty Income brought in $7.38, and Main Street Capital brought in 1615 because they paid out a special dividend yet again. SCHD continued to increase their dividends. They brought in $12.89. DGRO brought in $8.39. CGDV 746 and VU brought in $4.53. Now for my individual stock holdings, UPS brought in $6.28, ExxonMobil brought in $4.14, PLD Prologis brought in $4.97, Coca-Cola brought in $4.15, McDonald's brought in $3.29, Home Depot brought in $2.90, Google brought in 65 cents, Broadcom brought in $2, Cintas brought in 95 cents, Microsoft brought in $1, Visa brought in $1, Meta brought in 48 cents, and Nvidia brought in 4 cents. And then for a couple that I did sell out of, I had Devo brought in $5.87, FBY brought in $10.88, SPYD brought in $16.88, United Healthcare brought in $2.11, for a grand total for dividends of $568.86. For interest that I have in my high yield savings account in SoFi, 4%. If you guys are interested, that link is down in the comments below. You get $25 as well for signing up for it and depositing $50 into your bank account. And that 4% interest there brought in $62.02 for me. And so just between dividends and my interest, I brought in $630.88 in the month of December. You include on the $1,500 I bring in from the real estate, from rent, and I had a total of $2,130.88 coming in from passive income in the month of December. So now we look at the full year. In the full year, Coney brought in 1508.89, Tesla brought in 419.16 because I did have that at the beginning of the year and just picked it back up again in November and December. AMZ brought in 3407, BITO brought in 4764, and YMAX brought in 36402. XDTE brought in 2090, TLTW 22684, SVOL 25660, QQQI 16526, SPYI 16702, JEPQ is 11661, JEPI 8833, and AGGH at 10203. And I did just sell out of AGGH because I have TLTW as a bond ETF, so I don't feel like I need to have both, and AGGH has been significantly underperforming. HTGC brought in 123.88, ARCC 119.57, Hess Midstream brought in 80.34, Realty Income 62.75, Vici Properties 53.20, and Main Street Capital 97.81. SCHD brought in 46.30, DGRO brought in 26.40, CGDV 19.75, and VU brought in 15.16. Now the individual companies. UPS brought in 1904, ExxonMobil 1460, AbbVie 1380, Prologis 3108, Pepsi brought in 1266, Coca-Cola brought in 1393, Starbucks 1177, McDonald's 939, Procter & Gamble 942, Home Depot 1022, JP Morgan 822, Occidental Petroleum 513, Google $1.61, Broadcom 681, American Express 710, Cintas $2.95, Microsoft 270, Visa 340, MasterCard $1.89, Costco 338, Apple $1.98, Meta $1.63, and Nvidia 16 cents. Now for some that I sold out, Bank of America 834, BNS 67 cents, CAT 523, Devo 55.58, EPD 403, ET 790, FBY 1088, Flynn 389, Hybrid in 59.95, KLIP 289.07, Eli Lilly $1.59, Lowe's 308, Oracle 458, QQQY 648.54. And I sold out of that one because that one was a huge NAV erosion and I did not like how it was trending. SOXS 209, SPYD 5073, SQQQ $6.66, United Healthcare 421, VYM 2253, VYMI 3535, and WDTE 511.89. This, just like QQQY, I sold because the NAV erosion was huge. So total for the year in just dividends alone, I brought in $6,092.95. Interest on that savings that I had in that high yield savings account, which did start at 4.6% and has come down to that 4%, finished the year at $437.56. The few months that I had a tenant, I brought in $4,500 for rent. And so just from the interest and the dividends alone, I brought in $6,530.51. Tack on the $4,500 I had from having a tenant for a few months, and my total for the year is $11,030.51 for passive income. Now, looking at month over month, for the month of December, I was down 41.83%, but that's because I had a lot of high yielders. But when you tack on the rent, I was actually up 96.48%. When you look at the total year, dividends and interest alone, I was up 54.5%. That's a 54% raise that I gave myself in passive income year over year. Let me know when you guys last had a job give you a 54% raise. Yeah, pretty insane. So then year over year, when you include the rent in here, I was up over 160% for the entire year for passive income. So to break that all down for you guys, and I know I went through that quick, so feel free to pause that video at any time if you guys want to take a look at it. I have no problems obviously sharing it with you. So if you want to pause and see all the numbers and how they worked out, please feel free to do so. But when I discuss with a lot of people about why I sold out of Tesla, it's because I now bring in, with a lot of that money that I had from Tesla and the money that I had put aside in my bonds and treasuries, which I then switched over to high yield savings. And I used a good chunk of that to buy myself a house and then put it into that passive income and those dividend plays. I'm now generating $11,000 in that year. So I went from having Tesla stock where it was pretty beaten down. And I will do a full video breakdown going over the math for the next 3 to 5 years and how it would have all played out had I done it differently and kept Tesla stock alone. But looking at Tesla stock alone and the growth that we've had, we did not know we were going to get to the point we're going to be at right now. So I assumed that we would obviously come up over time. I had a feeling we were going to come up at some point over the course of the year. But you have to take into account timing of everything and the valuation that I specifically put on the stock. And I do think that there's a lot of future growth built into the stock, but even projecting out where we're at right now, even if you look at the all-time highs at $480, having that price that I had, if I had had all that money put into Tesla stock, my net worth would have been higher, but then I would have had to sell out of the stock in order to do anything that I wanted to do, buy a house or whatever it was. And I would have had that generation of income coming in that I have right now. And so now this discussion could be completely different if Tesla never did rebound, or if we end up getting a recession this year and we have Tesla sell down to fill that $218 gap, then I'm going to look like an absolute genius because I have this cash flow coming in and I can go buy at lower prices. I don't know if that's going to happen or not. I don't know if I'm going to be a genius, but either way, I have set myself up to be able to take advantage of that opportunity if it does present itself. If it doesn't present itself, it doesn't matter because I still have this cash flow coming in to be able to buy on whatever dips that we end up seeing when it comes to Tesla stock. And if you were going to tell yourself that we're not going to be seeing any more dips, you're lying to yourself because Tesla stock always dips. Every stock always dips. The entire market always dips because that's the nature of things, because it's actually healthy and good for the stock for it to do that. And it's unrealistic for a stock to continue to run outside of its valuation as it has. We said the same thing when we saw Tesla running in 2021. And guess what happened? We dropped over 70% in 2022. It happens. It's okay. And as we saw, it's going to rebound. I have no doubt it would happen again. But either way, the discussion between why I decided to make that decision was now I'm generating $11,000 in income. That's only 3 months worth of rent as well. You factor in an entire year's worth of that rent, and now we're looking at over $25,000 in passive income coming in. So I can do all of that. Plus, the rent that I was going to be paying if I didn't buy the house is absorbed into all of that as well. So it just made a lot more sense to do this to generate that income. And now this is where I'm sitting at. Plus, I also timed it well because I saw that the Fed was going to be dropping those interest rates, and the sentiment behind that, the sell the rumor situation where the interest rates ended up coming down last December, I caught that lull and I caught it at 6.5%, where right now it's over 7% in many areas and might actually go a little bit higher before it comes down again. So that's just Timing wise, I did that intentionally. So I did catch that one intentionally. And luckily, I had a house that was available, which is a great house. And I have a great tenant. So love the situation I'm in right now. So because of those decisions that I made, I'm in this much better situation. Now, with all of the dividend income that I have coming in as well, on top of all of that, I can then go ahead and buy myself even more Tesla stock. Again, I'm going to do a full video on the math, but when I did the math on it just roughly, based upon just my income and how much I was actually going to be able to invest into the stock, if I put every single dollar I was going to invest and had available to invest into Tesla stock, maybe $200 every single week. So maybe $750 to $800 a month I'd be able to put into Tesla stock. And it would have been generating no passive income from that at all, versus now where I can go ahead and put in, if I wanted to, that $600 that I'm getting in passive income every single month. That doesn't even include the rent that I have coming in from my tenant that I have some freedom and a leeway to do with as well. So that's why for me, I had to explain to you guys, and again, I'll do the full video breakdown on it, but why I decided to do what I did, because as this snowball continues to grow, I will have more and more money coming in to be able to invest into Tesla. Whereas before, it would have been flat and I would have had to rely on my job giving me raises, which last year was a super 0.5% raise. That's not even enough to cover inflation. And I would have actually been able to invest less every single month into Tesla as we went forward, because I was relying on my job to give me income versus I was going to be in control of my passive income through dividends and through rent. So that's why I did what I did. And so now we can see this growth going year over year. And I will continue to show you guys on a monthly basis what my increase is on a month over month basis. And I'll show you the year to date increase as well. So again, 160% raise I got year over year in passive income when you include rent, and a 54% raise year over year in just dividends and interest. So now I'm going to be looking to do that again this year. And again, if I can get a 50% raise again year over year, we're going to now be looking at about $9,000 to $10,000 in passive income from just dividends, and then most likely over $30,000 when you include rent. And that doesn't even include the fact that I'm going to be investing some money in a kitchen in the part of the house that I live in, which means I'll be able to separate the two units entirely and be able to charge more rent for my tenant and include heat for them to make an even better situation for them and a better situation for myself for income. Win-win. So I can take care of other people and take care of myself. Everybody wins in this situation just because I'm investing my money in other places to generate even more income. That's why I've been sharing so much about dividends and other ways of generating income for you guys, because to me, yes, it's great. And if you love your job and things are great and you don't mind and you've got 25, 30 years, have at it. If that's what you want to do and you want to go all in on Tesla, there's nothing wrong with that at all. But when I look at the long run for Tesla, eventually I do think that they're going to pay dividends. So at that point, you've accumulated a ton of shares. You could be getting some nice dividends coming in from Tesla to be able to live your life off of. Great. There's a lot of other strategies as well that you can utilize with Tesla in the long run if we get to that point. I think we will get there, but it's still an if. What I'm looking at when it comes to dividends is I'm basically investing in the US economy based upon the ETFs and all the stocks that I own. It's going to take the entire US economy to collapse for me to not be able to succeed and see growth in the future. When it comes to Tesla specifically, if the US economy collapses, it will collapse as well. Yes, it's diversified around the world, whereas a lot of other stocks are also, but there's a good chance that it will fall significantly. And you also have the factor of Tesla specific. So again, I don't think Tesla specific will fall, but there's two factors there versus one factor when it comes to dividends, and the dividends will snowball over time. Whereas with Tesla, you're banking on the company itself growing exponentially. Now, in the long run, Tesla may be worth more, but we're not going to have that passive income. Again, two completely different strategies. Both could work out extremely well, and I think both will do well in the long run. I'm just looking at it from my perspective where I don't want to have to worry about selling or anything like that in the future with Tesla. I can have that as a side hustle sort of in my own portfolio by still continuing to build up Tesla shares and have that stock there, and it'll be a nice little bonus in the future if they pay out dividends, but it'll be a bonus for me rather than the entire nest egg that I'm looking to build. So sorry for the long tangent and rant on that one. I just wanted to explain to you guys. And again, I'll do that full video for you guys on that breakdown in the future. I just want to share with you guys. Let me know what you guys think about this. Let me know if you guys have any passive income coming in for your portfolio. Do you own real estate? Do you have dividends? Do you have any ETFs that are your favorites that you have some dividends coming in from? Thank you so much for watching. I appreciate all of your support. Have a great one.